What's up, you guys? My name is Ian Raysor, and I am a top 1% agent with eXp Realty and an Air Force veteran. Today, we are going to be talking about the VA loan. The VA loan is the most powerful wealth building tool on the entire planet. And we're going to be doing this in one take, and something that I like to call Raysor Sharp One Takes, where you guys can truly see that I'm not reading off a script, I'm going off the dome so you can trust the information that is coming out of my mouth, right? And so we start talking about the VA loan. Well, what is the VA loan? The VA loan is a loan that is backed by the VA by 25%. What this means is that any lending institution, bank, credit union, they can all give out the VA loan. Now, with it being backed by the VA, this means that us as VA buyers, we are more appetizing, right, to these lenders and banks, because if we fail to pay back the loan, then the home gets foreclosed on. That's usually the process. And a lot of times with normal financing, the lenders lose money. With the VA loan, they don't lose money because the lender backs it up to 25%. So the lender is comfortable giving out the loan, which is why they can have flexible standards with who they give the VA loan to. And by the way, the VA loan has no minimum credit score. So when it comes to debt to income ratio, credit score, the things that it really takes to get people pre-approved, it's up to that lending institution and bank. The VA truly doesn't care. They like for you to have good credit history, so you want to be able to make on-time payments, right? We don't want to set people up for failure. So we don't want people to get pre-approved for a loan that cannot pay that loan back. So there are some standards that go into it. But at the end of the day, if you are active duty, you don't have a lot of debt, you're getting base pay, you're getting BAH, BAS, potentially COLA, hazard pay, hardship pay, any of this different things that we get with the military, we look good, right? So it's very easy for us to get pre-approved. And a lot of times BAH correlates with the location we are in for real estate, right? That's what BAH kind of goes into. Sometimes if you're buying a property or getting a bigger home to rent, you are coming out of pocket for your BAH. But that's, obviously I could talk about that another time. So when we talk about the VA loan, we're talking about the ability to use it multiple times at a time. So this is what I like to call VA farming. This is where you could buy a property, live in it for a year, and then put a tenant in that property, and then move out and buy another property with your VA loan, as long as you have good reason for moving out of that property. This can be you need to get closer to base, need to get closer to a hospital, get closer to better schools. Whatever the issue may be, if you are buying in the same city, you will need some sort of reason to move out. Now, if you are PCSing, you can just put a tenant in the first one and reuse your VA loan. If you're using the VA loan more than one time at a time, you are subject to a cap. Now, that cap is based off of county. Okay, so I'm in South Carolina. In all of South Carolina, the county cap is $806,000. This goes up usually every year based on inflation. So if I bought a property for $200,000, which is possible here in South Carolina, you have $606,000 left on your VA entitlement. So essentially, whatever amount you owe on that first property, take that away from 806, and that's what you would be able to use to rebuy as many properties as you want to, up to $806,000. Now, if you go into high price point areas, San Diego, LA, Seattle, Hawaii, it can range anywhere from $900,000 to $1 million to $1.3 million for a VA loan cap if you have more than one VA loan active. Now, if you are using the VA loan to buy one property only, there is no cap. You could buy a $2 million property with your VA loan and put 0% down, as long as that lender is okay with lending out that much money. But ultimately, as long as you qualify for it, you'll be okay. So if we're talking about how do you get access to your VA loan, it's something called a COE, Certificate of Eligibility. And so I talked about how powerful the VA loan is, how we can use it multiple times at a time. It's a lifetime benefit that we can use. So if you're active duty, a veteran, you can use the VA loan with an honorable discharge. Okay, if you are active duty, you get the COE by completing basic training and doing 90 days after basic. A lot of times for us active duty guys, that is after AIT, A school, tech school, whatever your branch calls it, whatever technical training you have, after you get out of tech school, generally you'll be able to use the VA loan. The kicker is you have to be approved to move off base. If you have a dependent, if you are married, have a family, whatever it may be, you will be approved to move off base right away to use your VA loan or rent an apartment, right? Or you can live on base housing. I don't recommend you do that, but it is what it is. And then if you are single, you are going to be put in the barracks, right? You're going to have to live in the barracks for, 2, 3, 4, 5 years, depending on the branch you join. The Air Force generally lets people out quicker than a lot of other branches. I was out as a low E4. I know people that are in the Army, Marines that are E5s that are still in the barracks, right? So it depends on what branch you join, or if you get married, then you'll be able to move off base. So it's very important that you pass dorm inspections, you do your job, get your certs, do everything you need to do to get off base as quickly as possible to start building that generational wealth. And so when it comes to using the VA loan, there are two types of ways to look at it. If you are looking to build a rental portfolio, or even buy a home and sell it when you leave that duty station, you want to make sure that you're buying a property that is going to cash flow. So if you say, hey, I want to rent this property out with my PCS and reuse my VA loan and buy another property at my next duty station, then you want to make sure that the comps are coming back to where if your mortgage payment's $1,500 a month, you can rent that property out for $1,800, $1,900 a month to cover expenses, property management, everything like that. So you know that you're for sure good to go. If you ball out and you buy a property and your mortgage is $2,000 a month and those properties are only renting for $1,900, that's where you run into an issue where you see people that have these horror stories about real estate agents being greedy and about real estate's not a good thing to buy. It's because they didn't do the numbers properly and they didn't work with the right person. So you want to make sure that, hey, my goal is to build a rental portfolio. I'm buying a property that has room for appreciation if I do work to it, or that I know I'm going to be able to put a tenant in there, whether they're military, Section 8, or I can Airbnb the property. That's all you need, right? You know that you're going to cash flow. And so, by the way, with me saying this, you only have to intend to live in the property for 1 year as a primary residence, and then you could buy a property and move out of it, Airbnb it, right, and turn it into a rental. At the end of the day, if you get to your cap and you've used the VA loan 3 times and you have the whole $800,000 taken up, your county cap is $806,000, you have one of two options. You can either refinance one of your homes to a conventional loan, freeing up that VA entitlement, or you can sell one of those properties and then your VA entitlement frees up again. And then that's how you can use the VA loan over and over and over. And that's how we can build generational wealth, right? And so there are other specialty type of products too that I can talk about. I think I'm going to save it for another video, but we have the VA one-time closed construction loan, which is a loan where we can buy land and build our very own house with nothing down. You do have to pay your own closing costs. And the VA renovation loan where you could buy properties and rehab them. And so no matter what you are doing with the VA loan, as long as you understand the process, you are going to be good to go. And so now we talk a little bit about the process. Okay, so you get pre-approved, you're moving off base, you're talking to a lender, you're working with a great real estate agent, you find the home that you want. How do you buy that house? So first you submit an offer, and then once that offer gets accepted, there are 4 upfront costs when it comes to buying real estate with our VA loan. And it is inspection, appraisal, earnest money, and closing costs. Inspection and appraisal, I always tell people, are about $1,200 to $1,200 combined. These fees are non-negotiable. You have to pay these things. You can waive an inspection, but in a buyer's market, in this kind of market, there's no reason to waive that inspection. So with that being said, you have the appraisal, which is where a VA appraiser comes out and they look at the property and make sure that it's livable, one, and that the value makes sense. That way you're not overpaying for a property, so they're there to protect us, which is why a lot of sellers and a lot of agents who do not understand the VA loan are afraid of the VA loan because it could screw up deals if the home underappraises. But at the same time, if the home is only worth $250,000, only pay $250,000 for the property. But then again, if you're buying a home for $250,000 and it appraises at $270,000, guess what? You have $20,000 of instant equity in that property that you don't need to tell the sellers about, right? It's none of their business because you're buying the property. But you know that you now have instant equity in that property. You could do a refinance, a HELOC, or sell it and make that money back. So at the end of the day, when we're talking about different ways that you can use the VA loan, it is truly just unlike anything else in the entire country. And so as long as you have that COE, you're approved to move off base. And like I said, with active duty, it's 90 days after basic training is when you're eligible to use the VA loan. Now, if you're National Guard and Reserve, it is 90 days of consecutive active duty service after tech school. So what this means is hometown recruiter, a deployment, a TDY, Title 10, Title 32 orders of any kind of 90 consecutive days, and you get access to the VA loan for your entire life as long as you guys get an honorable discharge. So that's why when we talk about, okay, you can use the VA loan in any military component, it is truly that simple. So get an honorable discharge, use the VA loan as quickly as possible. And if you guys have any more questions, I actually wrote a VA loan ebook that I'll link down below. And if you guys need anything, I go on TikTok live every night. If you're here from TikTok, I appreciate you. I see you. I love the support. And I'm going to be making a lot more of these videos. I know I bounced around a lot, but I'm just giving you guys information that's off the dome. And I'm going to make a more calm, collected video here in the future. But if you guys like this, I would appreciate if you like, subscribe, and I'll see you guys next time. All right? Peace.